I want to go over Ideal Financial. So they don't hard pull you at all. And that, as a matter of fact, let me see if I can, here, I'm going to pull up the, I got the scoop on the underwriting. So this is going to be for, I would say, more seasoned businesses, let me rephrase, for higher revenue businesses.
What does that mean? Like how much revenue?
So they want to see at least 180K per year.
Okay.
Gross.
Yeah.
So it's not going to be for like, and I forget what that breaks. I think that's like 17,000 a month or something like that.
Mm-hmm.
And I'll actually pull up the underwriting guidelines in just a second, but they don't hard pull you at all. And they have the reason why I say it's for more seasoned businesses, because the minimum draw amount is $5,000. So if you get the line of credit and you want to use it, you can't draw less than 5K.
Wow. Okay.
Right. So let me see if I can
Same day funding too. Now, are they going to be kind of pulling into your Plaid as well, like using Plaid for verification? There you go, right there.
There's multiple options. So you can send them bank statements. They'll accept bank statements.
Okay.
2
years
so
of
pretty
business.
much, yeah. So the way they work, I'd like to think they're kind of similar. Let me see, who are they similar to? So they have what's called draw fee. So there's no origination, but there are draw fees of like 1.99 to basically 3% per draw. So if you factor in a minimum, they actually raised the draw amount. Sorry. It used to be 5K. Now it's 10,000. So again, it's like, unless you have a need for it, it's, it's not like, if you need $500, $2,000, like, so that's pretty much how it is. Now, the great thing about them is that they don't hard pull you at all. They just do a soft pull of your Equifax, and you need a 650 Equifax FICO 8.
Personal?
Personal.
Wow.
Personal.
Equifax.
Wow. No hard pull. No hard pull if you accept the offer. Because what happens, they'll do a soft pull, they'll give you an offer. So when you apply, they give you multiple offers. So they'll give you a line of credit offer, they'll give you a term loan offer, and then they'll have one where like you can get a partial term loan, have it split between a term loan and a line of credit. And so the only thing I would say, 3 months.
Do they do a UCC filing for this though? Like I see like existing MCA, so like merchant cash advance. So is there like a?
Yeah. I'm not sure. I'm not 100%.
Everywhere but Nevada, dude. Like what the heck, bro? Hey, son. You guys are spoiled on the East Coast, man. That's all I got to say. Hey.
Yeah. It's weird. It's weird. Yeah, it's weird. Like, I have another like play that I want to
okay, that's cool.
Go over some personal stuff in a second, but yeah, they kind of want that first what is max third? Okay, no, max third position. So no, to answer your question, if you have a UCC filed, I think that's okay. They just don't want, like, if you have existing like MCAs that are like taking fixed daily payments. Yeah. That's basically what they don't like. But if you have other lines of credit, that's not going to matter. It's just cool. Like the fixed, like, where they, the auto drafts, daily auto drafts. Yep. And like I was saying, yeah, 180K in revenue or 15K per month. They want to see an average monthly balance of at least 5K. So if you're having NSFs, non-sufficient funds, then that's not going to look good. But yeah, overall, I would say this is more for like, big,
like restaurants, good restaurants, stuff like that. Restaurants,
yeah, restaurants, nightclubs, retail, stuff like that. But not necessarily, because you could have an online business and get one of these.
Even e-com, if you're putting major numbers up in e-com, like if you're putting like serious numbers up, $500,000, $1 million a year in e-com, that'd be a good one for this, right? And
actually, let me actually pull up. So they have like restricted industries.
Oh, they do.
So pretty much, yeah. So farming, construction, gun stores, cars, trucking,
real estate,
banking, stuff like that. But pretty much, I mean, that's pretty much everyone else is fair game.
Yeah. That's
and then they also have the same data points apply to the term loans as well.
Okay.
So for the term loan, I think they actually go up to it's pretty much the same, up to 250K. No origination fees. Let me see, what's the difference? They do the only whack thing is that they do weekly payments for the loans, and again, these are going to be shorter term financing options. This
influx of
like
capital, bridge loans type of stuff.
Yeah, 36 months is the max term, so it's not like it's not like a SBA or like a commercial bank loan. And also too, like the this is going to be for like prime credit. These are more like people who would already qualify for like the major banks, so they don't cater to subprime.
So go ahead.
Oh no, I'm sorry. Go ahead.
So our boy Irv Official, man, last month he did this crazy business mastermind, right? 7-hour funding framework called Insane. He talked about Smart Biz as one of the best places to get an SBA loan. I know that you're a big fan of Smart Biz. Can you kind of break down what that is? And like, I know that you're probably an affiliate of Smart Biz as well. So like, could you kind of tell people like the best route to get an SBA loan if they want to do that? Is Smart Biz the best way to do that? Like, can you kind of speak on that?
So, yeah, Smart Biz is basically they administer SBA loans. So the thing with SBA loans, right? Because there's a lot of companies that pretty much are able to provide SBA lones, right?
Yep.
It's all going to be based on like how well do they close, what's their loan origination process like, and things like that. So Smart Biz actually works not only just with SBA loans, but also bank loans as well. So I'm going to pull up real quick. I'm sure Irv probably went over some similar data points as well, but I'm just going to pull up some of the like requirements in terms of like the like what you should expect in terms of like a SBA loan. And when I say SBA loan, I'm talking about 7A loans, 504 loans,
micro loans too.
Yeah. So here, let me actually pull this up. Let me pull this up real quick. Smart Biz loans. So I like what I like about them is that they have a checklist, right? So they have, traditional term loans and SBA working capital loans, right? So like the 7A loan, oops, can y'all still see this?
Yep, we can see it.
Let me here, I'm trying to zoom in a little bit. 30,000 to 350,000, right? So they lay out the requirements right here, okay? 2 years minimum time in business, U.S. citizen, a 660 or higher FICO, and I believe they're going to be pulling the Experian. And so I don't know if you guys see this right here. I'm gonna go over this with another example, hopefully, in just a second. So you see this right here? GDSCR, right? So this stands for Global Debt Service Coverage Ratio divided by your business debt service coverage ratio has to be greater than 1.15. So what the hell does that mean? So global debt service coverage ratio combines your business and your personal debt. That's why I always say, like, it's not like when we're talking about small business credit, not corporate credit, but small business credit, your personal financials do come into play if you're personally guaranteeing it, right? Whether that's your credit, whether that's your your debt, So pretty much what they're looking at, global debt service coverage ratio combines your personal debts and your business debt. Okay, so add up all of your personal liabilities. So if you have personal cars, you have a personal mortgage, you got personal credit cards, personal loans, student loans, they add all of that up. Then they look at your business and then they combine it. And then debt service coverage ratio basically is what is your your monthly debt obligations, right? Compared to how much income you're producing. Right. So they're basically combining all of your personal debts, your business debts, your personal income, your business income. Then they create this ratio, and the ratio has to be greater than. So actually the global debt service coverage ratio is your personal and your business combined of all beneficial owners. So if you have a business that has multiple owners, they're going to combine everyone together. But let's just say for simplicity, it's just a single person, a single member LLC, right? So it's just going to be one person. So they're going to take that ratio, divide it by your business debt service coverage ratio, right? So your business debt service coverage ratio is basically your business debts, right? Divided by your business revenue. Because they want to see, okay, do you have enough money? Are you making enough money to cover all of your debts? And basically, they want you to be able to have a certain amount of cushion between how much money you're making and how much it costs to make your monthly repayments or your debt service. Your debt services are your monthly debt obligations. So your monthly payments. So your income has to exceed your debt by a certain or your monthly debt obligations by a certain ratio. That's pretty much what that is. I'm not going to get into that. Minimum annual revenue requirement, 250,000, no outstanding liens, bankruptcies, charge-offs, and current on all government-related loans, even federal student loans. So that's pretty much, I would say, with the 7A. Now they have like 504. Let me see if they have that. Okay. And then here they have like certain like criteria as well, that you basically have to just be in compliance with. Now, like I said earlier in the call, you want to make sure you have an accounting software. That is so important. If you're trying to get these big boy loans,
paperwork,
your financials have to be in place. Like you're not getting no PG, no doc loans for $250,000. It's just not happening nowhere.
Don't believe the parrots, y'all. You know what to do. Put up the parrot emojis, man. When you see them people talking about that stuff, just give them parrot emojis.
Maybe, I'm not going to say, maybe you can get 50K or 75K, but when we're talking about 250,000, $500,000, you're going to have to show some paperwork. There's no ifs, ands, buts. Think about it, right? Would you give somebody money? Would you lend somebody money without the data to make an informed decision on how they could even have the ability to repay it, confidently? Like it just doesn't make sense. Right. So anyways, these are just the basic requirements. So they have what's called liquid credit. So I believe this is going to be for SBA. They use what's called the Small Business Scoring Service. So that's the FICO SBSS. And that's another composite or combination of like your personal and business credit. I think Irv talked about that as well.
He broke that thing down, guys. If you have not watched that call, it's a 7-hour call in the business credit. You guys can go watch it so that way Plug can focus on the other stuff. Yep.
Absolutely. So yeah, that's just one thing. Like it's not like, like this is just an example. Like we're talking SB, Small Business Administration, keyword small business, not corporate businesses. Yep. So even SBA has guidelines on like the what they qualify as. So small business, your personal credit is still going to come into play. Yep. So yeah, this is just basically it. They do a cash flow analysis. So 2 years of business and personal taxes, year-to-date profit and loss and balance sheet, business debt schedule. This one is something that a lot of people don't talk about, and a lot of institutions are asking for this stuff, a business debt schedule. I've had to put together recently maybe like 3 of these, for different line of credit applications, right? 6 months of recent bank statements. Okay. So they have all this online. You know,
Yep.
I'm not going to waste any more time on this. So yeah, Smart Biz, and then they have term loan requirements as well. So these are going to be similar, but slightly higher than the SBA requirements. And so yeah, it is going to be similar, but I think with these, they're a little bit more stringent because these are actual commercial bank loans. So they might be a little bit more restrictive. And right here, like they kind of explains like the loan debt service coverage ratio, business debt service coverage ratio. So it says determined by business income and debt along with personal income and debt is real small. So you guys might not be able to see it.